Good morning and welcome to another short video from myself, Rob Newman at Carter, Collins and Meyer. We're a firm of accountants in North Manchester. We work across Greater Manchester, Lancashire and Cheshire. We look after owner-managed businesses of all shapes and sizes, up to about that £10 million a turnover type scale. We also do some other things, some forensic accounting work and some tax type situations. And today is a tax-based video that I'm actually going to talk about. It's one of the most common questions I get. How much tax money should I actually put aside? Well, one of the reasons that this is often an issue for people is in the early starting days of their business, they end up with a little bit of a tax holiday. If you leave employment and become a sole trader, it can be up to nearly 2 years before you actually have to pay that first tax bill. And then the big shock to them is they end up having to pay payments on account for the future. So the first tax bill that often hits small sole trader businesses is actually a whole 2 years of tax in one, having paid nothing for 2 years. Now, this can be quite a hit to their cash flow, and it can be quite a problem for a lot of smaller companies. And some of the problems that can come from that are done in some of the other videos that we're doing. But planning for tax is something that should be done. Tax is a consequence of being in business and making a profit. And in some respects is a good thing. That doesn't mean I like paying it. I hate paying tax personally, but I do. And it is the right thing to do for the country and the good of the people. Writing that check across to HMRC always makes my pulse rate go up, but know that it is done. If you don't have that situation of paying tax and you don't have the need to do it, there's probably a bigger fundamental problem in your business. You're probably not making profits. And if you're not making profits, your business is not going to be sustainable. So one of the first things that you should actually do is keep records. Now, depending on being a sole trader or a limited company, those type of records are going to be slightly different. You're going to have to do slightly different things. One of the big topics around sole traders, certainly for this year and into the next kind of coming years, is going to be MTD, making tax digital, and the reporting requirements that are going to be required for that. But fundamentally, keeping records is keeping track of the score of where you're at, what's coming in, what's going out, and what you can claim. Now, what you can claim is often the biggest question that small business owners have. And one of the things I'd encourage you to do is a copy of one of my books, Keep More, Make More, and Lose Less. The book itself is available on Amazon, or if you reach out directly through this video or LinkedIn, I'll happily send you the PDF copy of it. If you want the hard copy, my author's website is my name, robert-newman.co.uk, and you can get a hard copy through there. The book talks about the allowable expenses within businesses and is a general guide to what you can claim and what you can put through. So if you are capturing and recording things and you are listing your income and your outgoings, there's a broad rule of thumb that I would say to you in terms of keeping money aside for tax. And there's a way that I would certainly suggest doing it, because even though I'm an accountant, in the early days of business, when I was first getting going, when that tax bill came round, it was still a shock. It was still like, how do I possibly pay this? So what I do is I have a separate bank account. This can be in a pot. If you're with someone like Monzo or Tide, you can create a pot within things. And I put aside 15% of everything I earn into that bank account. Literally, as the money comes in, 15% of it is separated off and stored elsewhere. I also do the same for VAT, by the way. I actually take the VAT and separate it off and put it in a separate pot. So that if £100 comes in, 15 quid of that goes into one bank account, 20 quid of that goes into another bank account, and what's left is mine. I can do with what I need to do, pay the bills, pay the expenses, and do things. Now, I would say your own individual tax pot is going to have to be somewhere between 12.5% and 20%. Forgetting VAT, that's a separate pot as well. If you can put aside somewhere between 12.5% and 20% of your total income coming into your business into a separate pot, tax is not going to be a surprise. Tax is going to be there. Now, there's some nice pots that you can do. There's some high interest earning accounts. There's people who will help you find ways to deposit money. Now, I know you're a small business and cash flow is tight, and the idea of sticking 20% of all your revenue aside into something else is not going to be pleasant. It's going to be painful to do. I accept that. And there are times where I haven't done that myself. I have had to use that money. And if you are in that position and are coming to a tax point going, I have put nothing aside, two things. One, don't bury your head in the sand. Talk to your accountant, talk to me, talk to somebody else. And then together we can talk to HMRC. Believe it or not, HMRC do want you to stay in business. You are the golden goose and they want you to keep laying. They're not trying to close you down. If they do, they get nothing. If you approach them and talk to them and show that you have a plan to manage it, they will usually work with you. If you can then go forward and put something aside for the future, the ideal, as I say, 12.5%, 15% of things. If you can put 2%, 3%, 5%, it makes the whole process less painful for you. And it really is as simple as that. All of business really is as simple as that. It's no different than when you saw your grandma with jam jars, taking the weekly earnings and putting the money into separate jam jars and different things with it. Pots of funds allow you to organize yourself that way. And it doesn't have to be some big complicated accounting software piece. Accounting software is fantastic. I use pretty much all of them across the practice. And I am very much software agnostic because they have different strengths and skills for different types of businesses. But a spreadsheet works perfectly. And one of the larger businesses I work with runs their entire business on that spreadsheet. And frankly, there is no accounting software that would actually beat that spreadsheet for how they use it. But it takes a little bit of time and a little bit of process to set it up and have the discipline to keep doing it. But if you have that and you apply that rule of thumb of putting aside a little bit every time that you get income, you then don't run into tax issues, you won't run into tax problems, and the whole thing becomes so much more manageable. Now, very simple to say, harder to do, I accept that. If you need some help setting up that type of system in your business, I have a range of different books available. I have a range of resources on my own website at Carter Collins, which is uk-ccm.com, or reach out to me directly. I often hang out on LinkedIn. I'm there almost all the time, and I'd be delighted to give you some pointers and guidance. I do an initial free consultation, and often that will help you enough whereby you can get going and do your thing from there. If you need more than that, I'd be delighted to work with you. My name is Rob Newman, and I am a partner in Carter, Collins & Meyer, and I look forward to talking with you soon.